Welcome to this episode of Bites, Sites, and Life Insurance Insights. I'm your host, Bill Bell, Vice President of Advanced Sales with Penn Mutual, and I am so pleased that you chose to join us here today. Now, we are in Crystal Cove, California, literally one of the most beautiful places on earth. If you were to look right over there, you'd see the Pacific Ocean. We are at Javier's, which is one of my favorite restaurants. It's a high-end Mexican restaurant here in Crystal Cove. We have a special guest here today. Many people consider him the godfather of premium financing. We made him an offer that he couldn't refuse. He's going to be our guest on this episode of Bite Sites and Life Insurance Insights. He's already inside, so why don't we go find him and grab some food? Come on in, let's go. Hey, there he is.
Hey, Bill.
Hey, Julian.
How are you?
You.
Welcome to my town.
Oh, thanks for having us.
Thank you.
Thanks for being on Bite Sites and Life Insurance Insights.
I appreciate the Mexican lunch.
Absolutely. What do you say we get some lunch?
Let's do it.
All right.
Cheers, Bill.
Cheers, Julian. Thanks for having me. All right, Julian, most of our viewers are going to know who you are, but we can't assume that everybody does. So why don't you introduce yourself, tell everybody who you are, what you do, what your firm does, and maybe a little bit of your bio.
So I'm Julian Movsesian, and I'm the president and CEO of Succession Capital. I started my career with Connecticut Mutual, which now became Mass Mutual.
Yeah, that's amazing. So 30 years ago.
1995.
1995.
I used to cold call on farmers, ranchers, small business owners. My average death benefit back then was around maybe $50,000 to $75,000 death benefit.
So you paid your dues, but you finally found something that really worked for you. And today your company is the leader in premium financing.
Well, we are the leader in premium financing. However, our company, we're in a very niche market. We're in the ultra high net worth space, right? So we have very advanced team, and we have one of the brightest young ladies that we brought on the team, Kristen Williams, right? She's a JD LLM, right? Plus, she has a team behind her to support her. So it's not only about premium financing.
All right, well, we're going to dive a little more into premium financing in your firm later on in the interview. And we didn't mention this up top, but we actually got our food to go. We're going to actually record the remainder of the discussion at your house because you were nice enough to open that up for us. But I did have a couple of questions specific to this place that we're at right now. So we're at Javier's. You live literally, 5 minutes from here?
Like 3 minutes up the hill.
3 minutes up the hill. How often do you come here? Do you like being at Javier's? I mean, obviously, they were nice enough to open the doors for us today. What does a place like this mean to you as a member of this community?
Well, I was shocked when actually they opened up Javier's here originally several years ago. And it's probably one of the most popular restaurants in Orange County, in Newport Beach. It's like I won't even get near here on the weekends because the lines, obviously you can make reservation, but it's just so popular. People from out of town, they drive here just to dine here or have a cocktail here. There's a beautiful view of the Pacific Ocean. I mean, it's done a lot to the community.
It's an amazing place. I mean, and they just recently renovated. It's just so beautiful in here. So.
Oh yes, they renovated it, then they expanded it even more.
Yeah. I think I see our food coming, so why don't we wrap it up and then head up the hill and go record the rest of our interview up there.
Awesome. Can't wait, and I want to welcome you guys to my home.
All right. We'll see you up the hill.
Can I start eating? Let me take a bite.
Looks good. All right, Julian, we've changed locations, obviously. We are now at your house. What a beautiful view you have. It's a gorgeous day here in Southern California. What did you get at Javier's?
Well, I got the filet mignon picada, which they make a steak picada, but I like the beef to be very lean, and they have one of the best filet mignon picadas. Of course, their guacamole by far is the best.
Yeah.
So I gotta have the guacamole on the side with the filet mignon picada.
It looks amazing. I got the chicken fajitas, which is my go-to at Javier's. It's one of my favorites. Now, one of the things that we like to do on Bites sites and Life Insurance Insights is make a comparison between what somebody's eating and life insurance planning. So if you were going to compare your filet picada to the life insurance planning that you do at SCA, can you make that comparison for me? Is there something that goes into that where there's a commonality?
Well, first of all, the filet obviously is the top quality. So what we do at SCA is top quality. Just like the Penn Mutual whole life dividends is top quality. That's why our family policies are with Penn Mutual.
I wanted to circle back to something we talked about a little bit earlier in your background. Obviously, we heard about kind of the genesis of premium financing, but your story as a financial professional, and I think kind of what molded you, starts way before that. So I think a lot of people probably know, but not everybody knows, that you immigrated here some decades ago, and that you had some pretty humble beginnings, but I don't think everybody's heard that story. So can you share that? Because I've always loved hearing it.
So the reason I came to the States, so I would not be drafted in the Army. So I was supposed to stay here for 2 years, then go back. So when I told my dad I'm staying, he said, no problem, but he cut the allowance. He said, you're on your own. So my first job was at McDonald's in Pasadena. So, and I remember every night after we close the store, we have to clean the store, we take count of the burgers, how many burgers we're throwing away. So we write down the inventory and then we throw them away. We close the store. So one night I was hungry. I went to the trash bin to pick up a couple of burgers, the leftovers that we threw away. The manager saw me. He asked me, what are you doing there? I said, I'm just taking a couple of the cheeseburgers home. Because of that, they fired me next day.
So not McDonald's material is what you're saying.
Yeah, I mean, I wanted to buy that particular store not too long ago, but then I changed my mind.
So the fact that you did come from those humble beginnings and kind of had to work your way into the business, do you think that that molds how you advocate for your clients, and kind of that you want to always push to do your best for them and for your company?
You know, there's one thing I've learned is I have very good work ethics, right? And that doesn't mean I've done very well, but I don't forget how I started, right? I still take calls from some of my clients from 35, 40 years ago, the ones they had a $50,000 death benefit with me. And I tell my entire team, service is the number one priority in our office. It's very important to take care of the existing client. And today in the industry, everyone knows we're very service oriented. I mean, some of the cases that we work with advisors, we can't even find them, but we're still taking care of the policy holders.
So let's fast forward. You are often referred to as the godfather of premium financing. First of all, do you like that nickname?
I do and I don't, because Godfather sounds like I'm a part of the mob, and I'm not part of the mob. All right. So I know a lot of people that call me the Godfather of premium financing. I guess I'm okay with it now.
So I personally love it. I think it's a great nickname, and something you should be very proud of, because I mean, let's face it, you invented the concept that's so prevalent in business today. How do you think that premium financing went from kind of a real niche opportunity for just a real select group of people to something that it's considered anytime you're talking about planning for ultra high net worth people?
First of all, I was very fortunate that I had a gentleman's agreement with the American International Credit, which was part of AIG. And they gave me an exclusivity based on a handshake. I remember, Bill, I'm a little guy compared to AIG. Back then, AIG was a Fortune 20 company.
Yep.
As you know. So American General, they want to have access that what I put together with AIG. So they were the first company they partnered up with me. And I remember we had a huge first year. But then later on, back in 1998, my memory serves me right, back in 1998 or 99, they wanted to get out of the exclusivity. So I took over the CMS, the name of CMS, and we terminated the exclusivity. So then a lot of carriers want to have access to what I put together with AIG. So what I did, I had 10 carriers to be part of this exclusive club that AIG will finance the premiums, right? And I remember each carrier had to pay us technically what I called it a franchise fee, $150,000 a year. And the whole concept was we would not go outside the 10. So the 10 carriers had an exclusive arrangement with me and AIG for the entire premium finance program. And we had a hell of a run until, of course, 2008.
So one of the first times that you and I ever met was actually in 2008, and I think most of our viewers will remember that there was some stuff happening in the credit markets back in 2008. And I know that really, in many ways, shaped kind of how your career went going forward. You told the story a lot of times in regards to how you thought things were going to go versus how they actually went. But can you share that with our viewers?
You remember where we met in 2008?
Chicago at a big NFP meeting back then.
Right.
Yes.
And I remember before I went, I was on the main platform to speak. And I remember when I heard the news, what's happening. And I thought that was the end of my world, right? And if you remember Jessica Biblowitz, back in the CEO of NFP, she told me, calm down, relax, do what you do best, right? So before I got on stage, I called my office and I told them, get me a plane. As soon as I'm done with my speech, I want to come home, right? So I finished my speech, went to the airport, picked up the plane, came home. I told my wife, Aline, listen, we had almost a 14-year run, right? I'm done. She goes, you're done with what? I go, I'm done. I'm going to retire. She said, so what are you going to do every day? I go, honey, can go. I play tennis, we travel. She goes, our kid's still young. They have to go to school. We can't just leave them and go traveling. He goes, why don't you work part-time? Well, you know as well as I do, in our business, either you're in or you're out, right? So I guess I'm back in. And if you remember, Bill, even though AIG back then had a little competition, most lenders got out of the business. Right? So I'm the one introduced Wintrust to buy the AIG portfolio. I'm not sure if you knew that.
I did not know that.
So, but I also had access to a couple other lenders. So I was the only producer in the industry actually that had access, as far as I know, to money to let the clients or the trust. So 2009 was my best year personally ever in my 40-year career in the business. I broke all the records I think in the industry as personal production.
It was an incredible year.
Yeah.
And what you're saying is Aline was really the hero of the story.
Aline is the hero because she convinced me to stay and not to retire. You know, and you gotta love what you do. It's not about money. I love what I do. A lot of clients here still ask me, why do you work 60 hours a week? So I enjoy it very much.
All right, we've talked a lot about how you came up with the idea of premium financing and some of the implications of that, but For you, when you break it down, who is a good candidate for a premium financing arrangement? And is premium financing a reason why insurance should be purchased?
No, insurance should not be purchased because of premium finance. And I've said this for years, and you've heard me in our conferences, in industry events. First of all, in my opinion, premium financing is for clients that can actually afford to write the premium checks themselves, right? That's my rule number one. Because if the client cannot afford a $20 million policy, for example, he shouldn't buy it because it's of the financing. He's the wrong client, right? So premium financing is a tool. If the client wants that $20 million policy, for example, as I said earlier, or maybe I didn't, when I'm presenting to a client or my team presenting to the client, the first option, once you establish the need for that $20 million policy, the first option is always paying the cash premiums. However, we like to present to the client two options, either paying cash, that's option one, or option two, he can finance the premium using leverage. Well, we call it intelligent leverage, right? Because by using the premium financing, it's allowing the clients a little bit more flexibility. Now, they don't have to finance every year. Keep that in mind, right? I have some clients, they finance in the first couple of years, then they decided they're going to carry that loan. However, moving forward, they want to pay the premiums in cash. And then they can change their mind again. That's the flexibility that premium financing can provide to their clients.
So let me see if I got two really good takeaways there. First of all, if a client has a need for the life insurance, then you might consider premium financing, but you have to have that need first.
You got to have the need.
You got to have the need. And the second one, and I've used this in the podcast before, a premium financing case where you need premium financing is not a premium financing case, which means that if a client can't afford the premiums, then they shouldn't be financing it.
That is correct.
The same thing as like financing a car or financing a house. If you can't afford it, it's not a reason to do it.
You and I are on the same page. Because the last thing you want, that client that cannot afford the premiums in cash. I've seen advisors selling large life insurance policies being financed, but the client really couldn't afford to pay the cash premiums, so they financed it. Then 2-3 years later, either the client can't come up with the collateral, couldn't come up with the interest payment. So what happens, right? The clients have to cancel. The lender is going to call the collateral. They're going to surrender the policy. The client's going to lose a lot of money. And here starts problems. So again, the first rule in my book, when it comes to premium financing, the client's got to be able to afford paying these premiums in cash.
So we're in what I think a lot of people call a normalized interest rate environment. We had so many years between 2008 and then say 2017 or so, and then kind of during the COVID years where interest rates were rock bottom, and now they're more in the kind of historical norms. Does premium financing still work today, and how do you position it differently than when interest rates were so much lower?
Well, do you recall in 2006, 2007, what the rates were?
Yeah, they were
high sixes.
High sixes,
Low sevens.
Yeah.
And we were selling millions of dollars, right? Because the wealthy client, that's not going to bother him, right? But what happened after 2008, when interest rates start coming down and went down to 2.5%, 2.75%, 3%, right? Everybody jumped on the bandwagon. Everybody became an expert in premium financing, right? Now interest rates climb back up. Are the same people still in the business? I'm asking you that question.
No, they are not.
Because they don't know how to sell when the interest rates are high. Because why? You got to do the proper planning, right? You got to have the right clients. Because premium financing is not for everyone.
That's right.
All right. I mean, we like for clients to have at least 25 million net worth or higher. I know carriers, I've been begging carriers to increase their minimum guidelines. I know Penn took it up to 15.
That is true. But then when you're considering product type, I know that you guys use a lot of IUL, but you also use a lot of whole life. When do you consider one versus the other?
Depends on the age, right? So for example, if I have a client that's say 64 years old and he wants to buy that $20 million policy and it's purely for death benefit, for estate planning, I'm not sure if whole life is the right product or not. If you want to see it, absolutely, I'll be showing the Penn Mutual product, right? But on the other hand, with a properly funded IUL, right? Because obviously the cost will be much, much lower and has more flexibility than the whole life.
So you're Switzerland on product type. It just really depends on the case.
I am like the United Nations. You've heard me say this before. I like everybody, right?
Everybody.
I like GUL. That's my third choice.
Yep.
Whole life IUL is my first two choices.
So earlier this year, the SCA conference was unlike anything that I've ever been to. You had 4 major life insurance carriers sponsor it, and you also had participation from the 4 largest producer groups out there. Do you think that anybody else could have pulled that off, and why do you think it went so well?
Well, let me ask you this question. Has it been done before in the industry?
Not that I know of.
We wanted to do something that's never been done in the industry before. Obviously, the 4 carriers, technically they compete against each other, right?
We do.
The 4 producers, they compete against each other,
Yep.
right? And the reason everyone agreed to it, in my opinion, number one, it's about reputation, right? Our history, our track record, and of course, our results. Because again, if you don't have the results, they wouldn't be there, right? And again, the whole idea of our conference, the SCA Forum this year, was unity. Bill, there's enough business for everyone out there. It was so unique where we put the 4 CEOs of the producer groups on stage together. So I hosted an exclusive dinner just for all of them, all of us together. And I tell you, it was a hell of a dinner.
It was an incredible event. I was really curious going in just to see how that was going to go. And you're right, everybody played really nice and everybody had a great time and it was a great conference.
And how did you like our reception at Allegiant Stadium?
Oh, that was unbelievable. I've been getting to go down on the field and meeting Josh Jacobs. It was an unbelievable event for sure.
And what a good kid he is.
Really good kid.
Very humble, very good kid. I enjoyed meeting him.
And I don't think anybody else could have pulled that off other than SCA. So I work for Penn Mutual. This is a Penn Mutual show. What do you like about working with Penn Mutual?
Well, first of all, I love working with Penn Mutual. Not because you guys are sitting here. And it goes back, it's all about relationship and trust. And I'm going to tell you a story that you don't know about. So we're in the process of doing our estate plan. And I wanted to make sure that I wanted to buy the right policy for the family. So I called Dave because of the face amount was so large. Obviously, the underwriter is going to ask for financials. I called Dave and I asked him, if I send you our financials, would you look at it? Then if you're comfortable, seal our file. All right? He says, you have my word, right? And that's the trust I have in you, President and CEO, because you have great leadership at Penn, right? I trust the product, I trust the management, and their service is bar none, in my opinion.
He's pretty good, that O'Malley guy.
But he's a great leader running that company, all right? And also, if I need something or a top advisor needs something, they have access to the CEO, which is rare in our business.
For sure. He's closer to financial professionals than any CEO that I've ever seen in the industry.
Now, Dave is very, very, down to earth, honest, a lot of integrity. He's pretty good on stage.
Yeah, he's really sharp.
Yes, yes.
All right. Why don't we clear out this food here? I heard that there's some dessert waiting for us, and then we'll get to a couple of desserty questions.
All right, let's do it.
All right. So, Julian.
Yeah.
You recently, for the first time, became a grandfather. Congratulations, first of all.
Thank you. Thank you.
Has it changed your outlook in regards to kind of what we do on a day-to-day basis with life insurance planning? Has it changed your outlook on life in general, becoming a grandfather? At some point, I hope to be one myself. But I mean, how has it changed things in the Movsesian house since the little one arrived?
Well, since the little one arrived and now she's almost 3 months old, right? I wanted to make sure that she's going to remember mine and Aline, what we've built together, right? So I want that legacy to continue, maybe G2, right?
Yep.
So even though she's 3 months old, planning is so important. And actually, Aline and I, we met with our tax attorney to make sure it's well planned for our granddaughter.
All right. So you've made lots of great decisions over your lifetime. Obviously, you've got a terrific family, an awesome business, but there's one decision that I've always questioned. Why the Raiders?
You want me to tell you the story how I
Yes.
became a Raider fan?
Yes, and why you continue to be one.
All right. Well, first of all, I'm very loyal. Everyone knows that. So this is going back to 1982-83 season
Yep.
when I was working at Sambo's Coffee Shop. And everybody's making a big deal of the Super Bowl. I was not raised on American football. I was raised on European football.
Right.
Plus, I like tennis and so forth. So I'm in my little dinky apartment watching the news, and they put the two logos, Washington Redskins and the Oakland Raiders. Excuse me. Back then, they moved to LA,
Yep.
LA Raiders, right? So I went to my manager and I told him, because they were talking about pools and bets and all that, I go, here's $20, right? I'm going to take the guy with the one eye, right? So they never told me the Raiders were underdogs by 10 or 11 points. Well, if you remember that Super Bowl, the Raiders kicked butt and they won
yeah.
the Super Bowl with Jimmy Plunkett, Howie Long, Marcus Allen, and so forth.
Yeah.
So since then, I became a Raider fan.
Yes, I know you are. I've seen you on TV in the boxes at Raiders games.
Yeah.
But if you ever want to shift over to the Rams, you are more than welcome to join the Rams bandwagon.
No.
You have an official invite from me.
I'm very loyal. Just like I'm loyal to our carriers, I'm loyal to my football team.
All right, fair enough. So last question for you. I'd like you to get out your crystal ball and kind of look into the future of the life insurance industry. What do you foresee there being as far as opportunities and challenges? And where do you think SCA is going to be as far as helping to shape those opportunities?
Well, first of all, as you know, in the last several years, most of some of my biggest clients, they kept asking me, Julian, what's going to happen if you get hit by a bus? Who's going to take care of our policies? So I had to work on my succession plan. So I'm very fortunate that now I'm part of the AmeriLife group, right? Because now I know my entire team, if God forbid I get hit by a bus, my entire team and my clients are going to be taken care of. So that was absolutely, my plan was, again, when my clients asked me that question years ago, I had to work on it, right? Why AmeriLife? Because they were not in my space. I've been approached with other groups. Again, it wasn't about money. It had to be the right marriage, right? And the right marriage was with AmeriLife. And they want us to grow, and they're going to help me grow even more.
So you see kind of a rosy future for life insurance in general, and then SCA is well positioned to continue to service clients going forward because of the succession plan that you've put in place.
Absolutely. Not only that, and our goal again is to keep expanding. And the best thing about this partnership I have with AmeriLife, they let us make our own decisions. So it's a great partnership. Love it.
Can't argue with the success your firm has had.
No. Again, I'm very blessed. As Michael Jordan said, if you keep working hard, you will get lucky.
All right, well, that's a great place to wrap up the episode. Really appreciate you taking time out of your incredibly busy schedule. I'm sure the viewers love to hear your insights. So thanks again for being on the show.
You're welcome. I appreciate it. And thank you for the wonderful lunch.
Absolutely.
Keep that dividends rate up.
Thanks again to Julian for being our guest on this episode. A true innovator in our industry and just an all-around great guy. Here are 3 quick takeaways. Number 1, we now know how Julian got the nickname the Godfather of premium financing. Number 2, for the right client, premium financing can be a very powerful tool. And number 3, the views from Newport Coast are pretty spectacular. So for Julian, I'm Bill Bell. That's a wrap for now. Thanks for hanging out and catch you next time. Thank you for watching. If you got value from this video, make sure you check out our previous videos. We know you will love them.